RIVN stock is in a strong bearish trend. Its 200-day moving average. This one is sloping bearishly lower, and the extrapolation is that it's going to decline and consolidate for the best part of August. And in terms of projections that are currently in play, we have downward projections beginning from the least 11.65, 12.01, 12.60. However, there are some upper projections, even though they are currently not in play. They're also relevant because it's their targets the stock will eventually attempt to test if it assuming at any point in time it resumes the uptrend or maybe sustains the uptrend that it has just started to print as of Wednesday the 16th. Was it Thursday the 16th? Thursday the 17th of July. So those upper projections, I think we have some of them. Upper projections will be 13.83, 15.54, 16.41, 16.95. There might even be they may have even higher projections. They may have high projections, but I think 16.95 is quite modest. So based on its what we have on its price pressure momentum, we have a value of 0.4877, indicating that the 10-day moving average is in a trend mode. It is a validation of this uptick here we have seen that began on the Wednesday the 17th. So, but it's not enough. It hasn't. It's mostly yes. It's mostly it has just been only 2 days. That's why we can see that the 21 period moving average is still not in trend mode. Trend mode is from 0.25, and I can see that given these 2 days of gains for the stock, the short sellers are not worried at all so far. They're most certainly not worried. It's when we get values that are maybe in double digits or thereabout, then we can conclude that surely some short squeeze has occurred. Short sellers have been forced to close their positions, but as things stand right now, I don't think they are. They're not bothered yet. So, but momentum did increase, and it's indicating that it's not likely to hold. You can see negative derivatives here on the 10 and 21-day moving averages. So surely there has been the upper buying pressure was in place not very long, not long ago, just for 2 trading sessions. The algos are not expecting the buying pressure to remain in place or to continue. So however, there's a decent probability that the price is going to remain above its 10-day moving average, at least in the very short time. In the very short time. So let's see how things go. Let's listen to this readout concerning
R2 pivot to mass market. Rivian's eagerly awaited R2, a mid-size, more affordable SUV starting around $45,000, is being positioned as the company's tipping point into mass market scale. It's designed to lower build costs dramatically, target bill of materials of $32,000, approximately 50% less than current models, and ramp up production, with plans for 200K units annually by 2028 from the Illinois plant. VW joint venture and funding. The strategic partnership with Volkswagen is delivering critical capital, total JV up to $5.8 billion, including an initial $3.5 billion and milestone-triggered tranches like the latest $1 billion. This collaboration enables Rivian to access VW's supply network to possibly sidestep U.S. tariffs, $2,000 to $3,000 added cost per vehicle, and leverage shared software and architecture through the new RV Tech JV, aiding cost efficiency and OTA tech scalability. Tariffs and tax incentives. President Trump's proposed One Big Beautiful Bill may eliminate the $7,500 federal EV tax credit by September, impacting affordability for R2 and future models. Tariff headwinds on parts could increase expenses by 1.8 to 1.9 billion according to estimates. BNP Paribas notes potential upside for Rivian and Lucid if tax dynamics tilt in their favor. Production and demand. Q2 deliveries declined 23% year over year to 11,066 units, reflecting production shifts toward the 2026 MY rollout. While R2 production is planned in Normal, Illinois, ambitions to output 155,000 units annually rely heavily on scaling infrastructure. But there are signs of a demand slowdown. Some analyst platforms report concerns over cash burn, inventory buildup, and possible share dilution. Financials and valuation. Rivian finally achieved gross profit in Q1 2025, $206 million, aided by software revenue and design simplifications. Operating costs remain high, R&D plus SG&A, and EBITDA is still negative, approximately minus $329 million in Q1. The 2025 loss forecast is $1.7 to $1.9 billion. At $7.2 billion in cash, Rivian has approximately 22 months of runway, but risks remain if R2 momentum falters. Competitive landscape. Rivian stacks its R2 against Tesla Model Y and GM Hummer EVU. Though these competitors are already on the road, R2 hits in 2026. Tesla and Lucid represent benchmark peers. Tesla leads on scale and software income, autonomy, and Lucid competes in premium EVs. Rivian has carved a niche with its adventure brand and Amazon delivery truck partnership. Bull versus bear outlook. Bull case. R2 launches successfully, ramp to 100K annual units by 2027, unlocking economies of scale. VWJV and localized supply chains reduce cost and improve margins. Software and OTA services ramp, diversifying revenue beyond vehicle sales. Bear case. R2 delays or weaker demand necessitate further equity raises, diluting shareholders. Macroeconomic or tariff shocks, supply volatility, or political changes, e.g., EV credit rollback, derail forecasts. Intense competition from Tesla, GM, etc., cuts into Rivian's market share. Clyde Morgan at A Invest believes Rivian could hit break-even EBITDA by 2027, but warns that heavy execution risk makes it more of a long-term gamble than a near-term trade. In summary, Rivian is crossing a pivotal inflection point. The R2 rollout, VW backed tech gains, and potential tariff relief are all signs of upside. However, serious execution and macro risks loom, from delivery delays and demand softness to looming policy and tax changes. Investors remain divided. Bulls are optimistic about long term scaling, while bears remain cautious about its current $13 stock price given persistent cash burn and competition.
Okay, thank you very much for watching this video.